What's happening, everybody? Welcome to More Than Mortgage. Different studio today. Got a lot going on. That guy over there is Zach Jones. I'm Chad Anderson. Thanks for being here. Zach, we are, 3 weeks away? We're recording this on a Wednesday, the 28th of August. In 3 weeks from right now, the feds are going to come in and they're going to say, guess what? Rates have been chopped. What everybody needs to understand, and that's what Zach and I are going to talk about today, these aren't mortgage rates. These are the Fed rate. It's an apple orange scenario. Zach did a really good job articulating in a previous show that you can see on the channel, talking about how the Fed rate is a little more in line with the inflationary number this time, which impacts mortgage rates. Unlike every single time the feds decide to do something, it doesn't necessarily correlate to mortgages. This time it more does. But Zach, I keep hearing everybody's waiting until the 18th to buy, waiting for rates to come down, waiting for this magical Wednesday coming up in the middle of September that's going to save the world. And in reality, and you and I are on the same page here, we're kind of worried that people are waiting and they're going to be disappointed because it's possible that September 18th is a nothing burger.
Right. As far as being a hallmark shift in the market,
yeah,
it'll be a hallmark if the Fed does ultimately make good on, we'll call it a promise. They're kind of promising right now. The policy has changed. This was the big announcement from the Fed after the big meeting in Jackson Hole last week on Friday. And so the indicator is that there's a pretty solid expectation there will be a 25 basis point cut, which is 0.25% in the Fed funds rate, which directly translates into the prime interest rate. So the amount of interest that you pay on your HELOC is going to go down, and we've been looking for this Fed funds rate cut as the primary indicator that inflation has cooled down and the Fed shifts on their monetary policy, which they have said the time has come. So if there's a rate cut in excess of 25% in September, and all we have expected leading up to that cut is 25 basis points or a quarter of a point. If they cut it by half a point, and we've been expecting a quarter of a point, then we'll see some movement, some substantial movement maybe in the mortgage market. But what people have to understand is that when the Fed cuts that rate, the mortgage market and the stock market and everybody else has already anticipated that in the 6 to 10 to 14 to 22 days leading up to that announcement. And as long as the announcement holds and is as expected, there's no big fireworks on the day of the cut. So, I think it's kind of nice to think about that as maybe the rate cuts are baked into the market. That's a way to kind of think about it being a big part of the whole. So as long as everybody's guessing correctly, then it looks good.
Yeah, I mean, that's the big thing. If people wonder like maybe what's going on with me for a quick second, I've been moving my camera around and whatnot. We're actually moving tomorrow, so I've got people helping pack, and I'm sitting in my truck to do this with Zach, and people are moving my Bluetooth keyboard, Zach. So somebody upstairs has tried to turn us off about 4 different times while you were talking.
That's funny. Okay.
No personal offense to you, but yeah, that's what was going on. Sorry. So sorry for the camera movement and the distractions. But yeah, so what Zach said is that people have been anticipating the cut, and you can see that, on MBS Highway or Mortgage News Daily, whatever chart, you like to use, you can see where the trend, and remember, it's never this, or I guess it'd be this for people watching it. Never that. Right. It is here, down, here, down, here, down, and that just works its way up. And so everybody remember May 10th, 2023, Zach?
That was the day where the cascading waterfall was supposed to begin of 7 or 8 or 6 or 5 or 9 rate cuts all through this year. So we should really be, if that had happened as promised, the best minds in the business thought it was going to happen. We would be probably in a 4.5% to 5% conventional rate territory right now.
Right. The other thing that's kind of interesting is you're watching people who are still conflicted, and you've got this mass audience, right, called America, and you got buyers and sellers, and you got sellers who do want to sell, but they still don't want to give up their 3.25 or 2.5 or whatever they have.
Right.
But a lot of them are in so much debt, or are just ready to move, or are ready to tap into that equity they have. Because remember, we've talked about this. Only 3 ways to get your equity. You either sell your home, you get a HELOC at a high rate, or you do a cash out refinance, which gets rid of your current rate. That's the only 3 ways to actually get the equity that looks so miraculous and amazing. So you got sellers, though, who want that equity, but they don't want to give in too much and lose some of that equity. And then they do well, I'll just stay. I've got a 2.5 rate. You got buyers who still want to buy, but the rates haven't come down enough yet. Like, they're still kind of waiting. And I saw an article. I don't know what you think on this. Everybody keeps talking about, I'm going to wait on rates to come down. But they were saying that when rates were 8% in October of 23. Well, guys, rates are 6.4 on a national average right now.
Right, we're down 1.5 plus.
More in some cases. An FHA rate, you can get in the 4s today on an FHA deal.
Buy it down. Yeah.
You may spend a point or two, but you're getting there. And I just look at these things. I'm like, who's really serious? You know, like people, it's like being in the casino. At what point do you stop? You know, it's like, oh, I couldn't buy this house at 8. Well, I'm waiting on just get below 7. Well, now it's 6.4. Now everybody's waiting on September 18th. My biggest fear here, and what you were articulating so well, is that the markets, and people don't understand this, the markets for the mortgage rates have already factored in that the feds are cutting. They don't wait until the day of and then go, oh, here we go, off to the races. Right. It's been a trickle effect, and we've seen it because rates have gotten lower over the last couple of months. But at the same time, everybody keeps waiting. Like, I don't know what people think. Have you talked to anyone who has said, oh, well, September 18th, rates are going to go from 6.4 to 5.4? Like, I don't think people grasp that either. No. A 25 BIP rate cut for the Fed, and if it does correlate with mortgages, which in this case it kind of does, still only means that what? You're going to get an 1/8 in rate? Maybe
$34 a month, or $61 a month, or $17 a month, depending on your loan amount.
It's just an awkward conversation. I'll let you go, but it's awkward because you and I are sitting here knowing what the real impact is, but you're trying not to push a customer because that's just not how we do things. But you want to tell them, like, well, what are you truly trying to target? And sometimes people will spit out a number and they don't realize the math is impossible. Meaning, I've talked to people who literally wanted a payment to where the interest rate, their mortgage rate on a 30-year fixed, would have had to have been 1.8%.
Right.
So they're just, I don't want to say bad at math, but they have a misconception of what the math is. And I don't know why I understand why everybody's looking at September 18th, but I think they're going to get let down as to the actual impact of the day.
Right. And that's a conversation that you and I know have more often with customers, we're talking about rate buy downs and that sort of thing, and say, well, you can spend this much money to get 1/8% off of, where we are, or maybe you want to buy it down to 1/4. But when you start talking about those buy down numbers and what it really does in terms of a monthly payment, then my favorite example is people are looking at, I can spend that money and get $41 off of my mortgage payment, or I can spend that money on a new fence and have the backyard is now safe for my child or my dog. And the fence wins every single time on that equation, because it just doesn't, there's not enough there. And I made that point on a Facebook post with a friend of mine. It was earlier today, and she's a credit repair person, was asking a very sincere question about affordability in the United States, and the anticipation of rates coming down, and what kind of an impact is that going to have? And I just piped in and said, listen, that rates can't come down enough to make up for a first-time home buyer the difference that the last 4 or 5 years has made in the average monthly mortgage payment. You can't, on a $400,000 house, rates can't get down low enough for you to save $1,200 a month. It's just not going to happen. You can't get that loan at 0% and get $1,200 off a month, because it's a combination of two things: the massive appreciation that we saw in 2020 and 2021, or 2019 and 2020, however it came through in your market, and interest rates. So interest rates go down a little bit, and they go down a little bit more, and they go down a little bit more. And that's great. We're saving a little bit of money, but 1/4 really doesn't make a lot of difference. To your point, we've now accumulated 1.5% plus decline in interest rates. And I'm gonna make a note here for the audience. Chad is buying and selling a house this week. So he's the math guy with the details, working through the numbers, and he says this is a good time to buy and sell. So if you're kind of ambivalent and trying to figure out whether or not it's a good time to buy and sell, you've got an example, a living example, who's doing a podcast from his garage because he can't get into his house because the movers are packing up all of his stuff. So it's
loud as hell in there right now, man. It's loud as hell.
Great time to be doing this. And the other thing, Chad, human nature, man, we all want to buy at the very lowest and sell at the very highest. I can remember way back in the day, when Visa did their IPO, I was going to go in there and I was going to kill it, man, because I'd done my research. And when MasterCard did it, all these people made all this money. It took me a year. There's a lot of money for me. I put $10,000 into Visa stock, and it took me a year to break even on it with my trade fees. And I was like, this is not for me. The stock market, single stocks, is not for me. I just don't have the risk tolerance for it. So it's very hard to figure it out and time it perfectly. Always brings me back to the right house at the right price. Yeah. That's where I land on it every time.
Yeah, I mean, that's our thing. We have a great house and a great rate, but we saw an opportunity to buy a house on some land. And so what am I going to do? Wait for rates to be 4%, or
it's
because
the perfect house, it's where you live,
or because it's the house I want. Yeah, we just go ahead and do it. And yeah, it sucks to have a little bit of a higher interest rate for now, but at the same time, I feel like the house I'm buying anyway is kind of unique, and it's in Brentwood, so it's going to appreciate in value over time. Rates will come down. I'll refinance it. Now
you can get in the meantime, you can get you some chickens and set you up a little farm stand at the road and sell eggs, make up the difference. It'd be awesome.
The boys are going to be selling flowers. Brittany's doing a flower farm. I mean, it's all kinds of stuff going on. That's actually a true story. If you see flowers,
lessons in entrepreneurship. Listen, it's you're multitasking over there. I love it.
It is. The biggest thing is, though, people have to remember, I'm also buying, and I know what I can and what I cannot afford. I'm not out looking at a $4 million house or even a $2 million house or anything crazy. We're looking at what's within the budget, and does the rate fit the budget? And okay, worst case, rates don't come down for 2 years. Can I still afford the payment? If that answer is yes, I feel like it's a great time to buy.
Yeah.
And yes, we're going to have hopefully some more rate cuts, and then you're going to have refinance opportunities. Here's the other thing is that I try to drill this in everyone's head. You never buy at the lowest low or sell at the highest high. I say that all the time.
Can't do
You
it.
just don't, you can't, you won't get over it. You're going to leave money on the table. When you sell your home, you're going to leave money on the table unless you happen to sell in 20 and 21, but that'll never happen again, most likely.
Yeah.
If you're buying, you're probably not buying at the lowest low. You know, you can beat people up over and over and over again, and maybe you get a deal, but at the same time, maybe you don't. So just people have this like anxiety about winning and losing on dollars and cents. And I get it. You want to maximize, but at some point, you know, this was an old call center trick when we would refinance people over the phone in the call centers. And it would be, you know, hey, you've spoken to me for an hour, and now you're going to go speak to 4 other lenders all for an hour, and then you're going to analyze it, and you're going to do this, you're going to do that, and you're going to spend 10 hours deciding if you should even do a refinance, and then you're going to do all the paperwork, and you're going to send all the stuff in. Like, how much do you make per hour at your job? And then you start breaking that down. It's like, do you realize you just wasted another, you know, X times the number of hours equals Z? You've just wasted that much money by overthinking this whole process. So I tell people right before we got on this call or this show, I had someone pre-qualified. They came back, found a house, they like it. It's $340 more per month than they're wanting to spend. So it's kind of out of their budget. Yeah. But same problem though, is that they're in this tug of war with society right now in the economy, because they go any lower in price, there's literally nothing they want.
Right.
But they're renting right now. So it's like, you got to buy so you're not renting. But if you do buy, you're stretched by $300 more than you wanted to be stretched. And really, there's nothing you can do about it. Right. So you can do things like, you know, a temporary buy down, put a Band-Aid on it. But that doesn't mean it's going to fix the problem, because
you change your household budget, you know, it's
right. Yeah. You can do that. You can do that too. But that's another thing, you know, for 2 years, people have said, oh, just buy the house and refinance later. We're in later.
Yeah.
Rates
that
still
didn't work out so well. Yeah. No, that didn't work out so well. You have to, like you were saying, it has to fit into the plan. It has to fit into the budget. And sometimes that means sacrifices, you know, and that's a harder thing for people to do, period. It's hard. And sometimes there's, you know, in the current situation, I think there's a lot of people who don't have the flexibility, period, because they've maxed everything else out, because they didn't stop spending when they should have. Right. You know, lots of problems there. So,
yeah. All right. Well, summarize real quick. September 18th. It's going to be a day the Fed makes at least a 25 basis point cut, but that doesn't mean that all of a sudden rates are going to be 2%. So just temper expectations, because I think everybody's been getting worked up now for about 2 months about the September 18th date. And I think it's going to overpromise and underdeliver, to be honest with you.
Yep. The count is coming. Just think about it already being baked into mortgage rates. And so, you know, we continue to look for good news. And like you said, Chad, I'm going to try to get my trend line right.
You got it.
That's important, because I very specifically looked at that trend line on mortgage-backed securities yesterday, and it's a strong trend line when you take us down from the worst days recently and moving in the correct direction. And there's wins and losses in that as we're going, you know, up and down the scale, but the trend line is strong. And so we're in that, we may be right now in that sweet spot between, you know, rates coming down and getting into a more attractive zone before, you know, the tsunami of buyers comes in. I did have a client this week who lost out on a house first day on the market, you know, came in at list price, and it actually sold for almost 8%. Well, somewhere north of 8% over list. We don't know how high it sold for. it's listed at 750, and it blew past with 2 offers past 800. That's a pretty big chunk, and it's not, it was a great house in a great area. And in the same market, we've got houses that have been on the market for 90 or 120 days that maybe weren't as desirable. So it's a strange spot to be in. Interesting to see that house go with, I think they had 7 or 8 offers, and 2 that went north of a number that I never thought it would go north of. So weird market, but potentially the rightest time to buy with the best choice in houses, and rates as favorable as they've been in months and months and months and months.
Yeah. We'll see what happens. Q4 ought to be really interesting. So we're only we're only about 30 plus days from Q4. We'll see how the year wraps up. So, all right. He's Zach Jones. I'm Chad Anderson. Thanks for hanging out. Do us a favor, like, subscribe, follow. Those are the socials up there, the little handles here and here. And appreciate all you guys and the support and the interaction, collaboration. Hope you guys have a great rest of the week. Hopefully September 18th doesn't disappoint. And we'll catch you next week with another episode. Take care.
See you next time.